Welcome to the session, everyone. Today we're diving deep into spotting and steering clear of unregulated crypto platforms, considering the risks that come with the crypto world.
Absolutely. It's such a hot topic. So, what are the main things we need to be aware of when evaluating these platforms?
Well, first off, unregulated crypto platforms have been linked to some major hacks and scams. I'm talking, for example, about that phishing attack in August 2024 that cost investors around $238 million.
Hmm.
This kind of incident shows just how dangerous things can get.
Right. And if I remember correctly, there was even another incident with a hack on Wazir X in July 2024 that led to 234.9 million in losses. Yes?
Precisely. And these incidents underline why it's crucial to distinguish between platforms that are properly regulated versus those that operate in a more shady, unregulated manner.
Yep. So, what are some of the red flags that investors should really be on the lookout for?
There are several key warning signs, starting with the lack of licensing. If a crypto platform doesn't have proper licensing or a clear permission from regulatory authorities, that's a big alarm bell.
Yeah. And then there's the management side, right? Anonymous management can be a huge red flag.
Exactly. If the people behind the platform are hidden or unknown, it makes accountability impossible. I mean, remember the BitConnect saga? They had anonymous developers, and that mystery was a red flag long before the collapse.
Oh, totally. What about customer support issues? I've heard that poor or even non existent customer support is another major indicator.
Yeah, that's spot on. Reputable platforms offer clear, multiple channels for assistance like live chat, phone, or email. If a platform lacks this, then investors might find themselves stranded if issues arise during transactions.
It makes sense. If you're spending real money, you want to know there's someone to help, right?
Exactly. It's like you're relying on a bridge that may have shaky underpinnings, and then there are unrealistic promises. If a platform is promising insanely high returns, that's another red flag.
Yeah, right. The promises that sound too good to be true almost always are. And when these platforms market themselves with lower fees and anonymous trading, isn't that a bit of bait for fraudsters?
Very much so. They often lure in traders with these attractive offers. But then behind the scenes, there might be pyramid schemes or referral programs that end up like collapsing and leaving people with huge
Yep.
losses.
Speaking of scams, I recently read about the OneCoin pyramid scheme, which swindled people out of billions. Quite an eye opener, don't you think?
Absolutely. OneCoin is a prime example where the entire premise was built on um, deception. And importantly, a lack of proper know your customer KYC measures is another crucial indicator.
If there's no KYC, it's almost like the platform is inviting criminal activity. How important is, say, two factor authentication and SSL encryption in this scenario?
Oh, that's super important. These security measures, like two factor authentication, provide that extra layer of defense for your account. SSL encryption ensures that the data transmitted is safe. You wouldn't build a house without a solid foundation, right?
Right. Yeah, and platforms that store most funds in cold storage and undergo regular audits show that they care about security.
Exactly. If a platform isn't transparent about insurance policies or regular audits, then it's likely cutting corners, and that can seriously compromise your investments.
Absolutely. Now, there's one thing I want to challenge a bit. When someone says, oh, well, lower fees and anonymous trading make for a better experience, don't you think that might be a misguided benefit?
I totally get your point, and I respectfully disagree. While lower fees might look nice, they're often a lure for unregulated, unsafe platforms. The increased risk far outweighs the benefit of reduced costs.
Yes, indeed.
It's like buying a bargain car that's missing its brakes.
That's a powerful analogy. It really emphasizes that the impact of fraud or a hack can be devastatingly irreversible.
Exactly. And part of the solution is doing due diligence. Conduct thorough research, check user reviews across platforms like Reddit or industry reports from firms like PeckShield. Remember the fact that crypto exchange thefts have been on the rise in value in 2024 even as the overall number of thefts might be dropping.
Right? It shows that even if incidents are less frequent, the financial impact can be huge because digital asset prices are just so high now.
Spot on. And while the crypto landscape is still super exciting and innovative, the absence of robust regulatory oversight means that investments are very much at the mercy of risk.
I get that. And it's not just about avoiding scams, it's really about protecting your financial future.
Absolutely, it's about safeguarding your investments. And careful evaluation is key, especially when a platform is, marketing itself with promises of quick wealth. They often neglect proper security measures and customer support to keep
Yeah.
overheads low.
And this ties into the whole discussion about how unregulated platforms grow. They often bypass regulations so that criminals and bad actors can exploit the lack of oversight.
Exactly. The unregulated environment is a double-edged sword. It fosters innovation, like with new tech and DeFi projects, but it also leaves room for fraudulent projects to crop up without accountability.
True indeed. And then there's the historical context. Bitcoin started in 2009, and as crypto spread, regulations always lagged. This allowed both genuine innovation and too many shady projects.
Right? Which is why we're now seeing a shift. More platforms are starting to adopt robust security measures and seek proper licensing, thanks in part to the awareness raised by these high profile incidents.
So, to wrap up, what practical steps should every investor take to avoid these risky platforms?
Great question. First, always check if the platform is licensed and regulated by a recognized financial authority. Next, verify the management details. If the leadership is anonymous, it's a major red flag.
Right. And definitely look for strong security features like two-factor authentication, SSL encryption, and cold storage tactics with regular audits.
Exactly. Also, check out the customer support options and make sure there are sufficient methods available. Plus, review user feedback online. If a lot of users report issues, that's a big warning sign.
Absolutely. And of course, never be swayed by promises of unrealistic returns or too good to be true schemes.
Precisely. Investors need to be skeptical and do their own research. Always ask, why is this platform so different? And what safeguards
Right,
are in
very
place
sensible.
before committing any funds?
It's like, treating your investments like a prized garden. You have to water it with careful thought and keep the weeds of fraud at bay.
Exactly. It's like nurturing a garden. You need to be vigilant, consistent, and informed to see it grow safely.
Absolutely. Well, that was a thorough discussion. It definitely gives listeners a lot to think about when navigating the crypto world.
Totally staying informed and cautious is the best defense. Remember, the excitement of crypto is real, but so are the risks.
Thanks for such an engaging dive into these points. It's so important for everyone to be aware and protected.
And remember, folks, always do your due diligence because protecting your investments is just as vital as chasing innovation.
Right on. That's all for today. Stay safe out there in the crypto space.